Well, it is Good News Tuesday. And, on a day like today, some folks might think that it's a little hard to find the good news. Some of you out there might be trying to figure out how I'm going to do that today. Well, I just gave up and called Nick. So Nicholas Gibbs is with me today to figure out what the good news was today. Let's talk about what happened today. So stock was down, numbers were way less than expected. Market was down really pretty significantly for the second day in a row. What else? Was there any other things that were happening today that you were paying attention to?
That's a good question. Employment numbers were interesting.
Yeah, we'll look at
Uh,
those. Yeah.
Fed speakers were interesting. Uh,
Oh, I'll have to ask you about that in a minute. Yeah.
yeah. Yeah, I think that's about it.
So, did you see good news out there today? Anything that jumps to mind right away?
You know, what I'm about to say is gonna probably leave a lot of people thinking we can't even listen to Nick anymore. But I I tweeted about this the second the numbers came out for
Okay.
Tesla deliveries. I actually saw it as a very good sign in some ways. The reason that is because this just created the most just obvious misunderstanding of what Tesla is right now as a company and where the investment's going. Everybody is distracted over here by the hardware numbers, the vehicles, and they don't see what's happening over here with the software, with the FSD, with it going wide, with it not being beta anymore. And people are missing the forest for the trees on what really matters. It's not to sugarcoat to say that the numbers were good,
Yeah,
right?
right.
They were lower than what anyone was expecting. But if you are an investor over a long term and you're consistently buying and dollar cost averaging, this is just incredible that we have this window of crappy news, crappy data, crappy deliveries on the brink of the greatest transformation of our society, all happening on the same company in the same moment. It could be in 6 months from now, it could be 3 months from now, it could be a year from now, it could be 2 years from now. It's going to be insane to look back and say, I cannot believe that we were at these prices. And so, if you look at it from a quarter perspective, or if you look at it from a week perspective, maybe even a year perspective, maybe this scares you or this doesn't look good. But if you understand the whole picture and where we're going in the future, which in my opinion is the definition of investing,
Uh-huh.
oh my goodness, this is like it the irony is palpable. So,
So yeah. So there you go. So this points out to you this disconnect between the street always being concerned about this quarter and even individual stockholders being concerned and worried about their values going down, as opposed to paying attention to the long term. You either buy the story or you don't, which is kind of a theme of this channel. You either buy the story or you don't. Either full self-driving is going to happen or it's not. Either robots, Optimus robots are going to come along or they're not. Either energy storage is going to be a $400 billion business or it's not. I mean, you just go down the list and these are all massive, large plays that are likely or almost certain to happen. And, one quarter does not a company make.
yeah, Randy, listen, I just flew to New York City. My whole flight, I was listening to CNBC, and everybody on there is a trader. And nonstop, they were talking about this is bad, really bad for the next, X amount of months, quarter, 2 quarters out. And they had Gene Munster on there, and they replayed this interview over and over. And Gene's talking about looking out to like this time next year in 2025 or whatnot. And they were saying, "Oh my goodness, waiting till next year, that's forever away. And I'm sitting here thinking, like, really? Like that's nothing. Like 2025 starts in less than 9 months. Like,
Right.
this is insane. You're thinking that's so far out. So, a lot of the narrative and spin is driven by that type of mentality, right? And you can see this just in cycles over and over. And this is why people lose money in the stock market, is because they have these short-term way of thinking, and because CNBC is fun to watch. There's a reason it's fun to watch, because it's entertaining,
Yeah.
right? But you don't see the Randy Kirks, you don't see the Larrys, the Tesla Brewer Mamas, the Ron Barons, you can go on and on. These are not the people who make all their wealth by thinking about the 1 month, the 2 month, the trading in and out. And it sounds sexy. And it sounds like we can get rich quick and you can do options and all these things, right? And, there's a place for all that, small place, but that's not what's going to create generational wealth. And I know you're probably like, oh, Nick, you're like a child. Listen, I don't talk about my net worth or anything like that, but I'm telling you, it's a real thing. I had the same story told to me when I was invested all into Apple, and then when I moved into Amazon, it was the same stories over and over. Tesla Boomer Mama posted something recently about iPod sales,
Yeah.
right, and,
Yeah.
and them going down. I remember being invested in Amazon and people telling me about why Amazon was just so awful because it's just a bookstore. And okay, yeah, maybe they go into a couple other things. And I'm sitting there just looking like, you don't even know about AWS. You don't know what's going on here. Tesla's the same thing. People are talking about the cars. You don't know about FSD. You don't know about the energy. You don't know about Optimus. So I don't know. It's just insane to see the story repeat itself. Again, not the sugarcoat. Numbers weren't great,
Yep.
but if you can zoom out the way many of us do, and we look at the bigger picture, not saying that we don't acknowledge the numbers,
Yep.
not
Yep.
acknowledge that there are hiccups, but nothing goes up in a straight line.
Right.
And the bigger thesis is intact still. So I'll stop there. I'll get off my high horse, but
So you were talking about Gene Munster, and he specifically said, "I have a different explanation than Tesla about why March deliveries were ugly." He says, "Big picture, I believe this will pass because Tesla is making the right decisions for the long run." He says the story is intact, electrification and autonomy. He says could actually go lower if the numbers go lower. I said this morning that it could go lower if the market continues lower, because it's going to go with the market to a certain extent. He still thinks that interest rates are the biggest issue. I don't agree with him, but that's what he thinks. He thinks excitement for EVs is worn off. I think that he's wrong about that. I think we're just in a part of the S curve where production, well, we'll talk more about that in a minute. I don't necessarily agree with him about EV excitement wearing off. And he says a smaller factor, he says Elon's brand. We'll talk about that a little bit more, but he said he sees that as a slight net negative on the branding in terms of his move to the right. So let me just throw that out there. We'll come back to all three of those issues in a minute, and you can opine in greater detail. So let's go to number 2 here on the good news today. The stock actually did really well compared when you consider the bad news. Squawk Square, who's on there every single day on X, he says, all things considered, today could have been much worse. I did a special version of this a special episode this morning, an extra episode, because that was so obvious. We were only down like what did it end up? $8 or something, $8.50. That was shocking.
yeah. And the crazy thing is, we were there like 2 weeks ago. We
Yeah,
were actually lower about 2 weeks ago. We were like at 161,
right.
and we ended at what, 166,
Something
167.
like that. Yeah, yeah, yeah,
Yeah.
yeah.
So yeah, the stock held up extremely well, but I think a lot of that is because a lot of people have been buying. I mean, you can see Kathy Woods has
Yeah.
been buying hand over fist. If she is, other people are. I think. I think we're seeing more and more institutional buyers come in, but they're quiet.
Yeah.
They're not loud about it,
Yeah.
right? CNBC, very loud about whatever they're doing. The people who make all the real money, very quiet. You know why? They don't want you to know what they're doing. They want you to be scared. They want you to sell because they see what's going on. I think the biggest signal was when Elon, at the end of a quarter, knowing full well that the numbers were not going to be great, said, "Down with the submarines. I don't care about deliveries. Let's get FSD. I don't care if it slows down. This is not about a quarterly number. This is
Mhm.
a bigger picture." And for those who say, "Oh, he's just trying to get all the revenue and all that," listen, it might. I think they have like what billion that they can recognize, something like that
Yeah,
for
yeah,
FSD right now. It's not about that. Well, what's a billion? All right, they got 30 something in the bank. Like that's not what it's about. It's also not going to show anything meaningful in the numbers this or for Q1.
right.
So it had nothing to do with that. To me, that's signal. You
Yep.
add into that, Elon's whole vacation thing. What a shock just tweeted out recently. I mean, they're seeing something we don't know. They
Yeah.
were talking about this bullish about V12 before.
Yep.
Now they're ramping up their bullishness and their rhetoric. That's 12.4, that's 12.5 that they see that they're working on right now. So yeah, it's Randy. The fact that the stock's holding up, I think, is because of institutional buyers in the background picking up what everybody else is scared selling.
Well, I wrote this third piece of good news before I saw what Dan Ives had to say. I said, wake up call to Austin that something needs to change. And then Dan Ives said, while anticipating a bad first quarter, this was an unmitigated disaster. The first quarter is hard to explain away. We view this as a seminal moment in the Tesla story for Musk to either turn this around and reverse the black eye. Otherwise, darker days are ahead. And I agree with him in terms of the unit numbers and what that'll do to the stock in the next few months. And the reason I brought it up as a wake up call to Austin is all around the issue of what is really going on in these numbers. And I'm going to say, and I've already done 2 videos on this today, but there'll be people that have not heard what I had to say. And then I want to hear what you have to say. This is all about the Model Y. You can go down the list. They're selling every Model 3 they can make. Shanghai is selling every car that they can make. They're doing great. They did 89,000 in March. They're doing fine and exporting to all these other countries. The real issue is the Model Y in Europe and the Model Y in Austin. They're not getting the increases there. And in fact, I think that's what's piling up somewhere. I don't know. It could be on ships. It could be, I don't know where it is, but there's Model Ys that are not being sold. And I'll bet you the bulk of that $47,000 overhang between the sales and the shipments, sales and the production is almost all Model Ys. Now, the Model Y is the largest selling car in the world. And there's an S curve. We were talking about that a second ago. Well, the S curve goes, and the S curve is not going to go it's not going to just go always up. It's not always going to go in exactly the same pattern. So there could be, for multiple reasons, a slowdown in the interest in the Y right now. And I have, I think, 4 reasons. Maybe there's only 3. But well, anyway, seasonality. We know
Rick
that
moment.
we know that this first quarter is the slow season. No question about that. Number 2, I think it has to do with Cybertruck um, um, cannibalizing sales of the Model Y. The same buyer. In most cases, right now, the buyer for the Cybertruck is the same buyer. Now, when it gets down to the farmers and the construction workers, no, it's not the same buyer. But the lifestyle buyer, same person is going to buy the Cybertruck that's going to buy the Model Y. So I'm saying people are waiting for their Cybertruck rather than buying the Model Y. Number 3, the Model 3 changeover. That's getting people excited about the Model 3. And there are people that would be on the fence between a 3 and a Y. And those people are saying that Model 3 is a bomb. I'm getting the Model 3, not the Model Y. And number 4 would be the Osborne effect on the Juniper, because the Model Y is now stuck in this old-fashioned environment that was created. It's only old-fashioned because of Tesla making it such an amazing Model 3, an amazing Cybertruck. What do you think about my theory?
It's plausible. Uh, I think there's a lot of little things, right? I think it's death by a thousand cuts. I think one, it's Q1. I think if you look historically, I could be wrong. I haven't looked this in a while, but normally I believe Q1 tends to have higher buildup in supply.
Yes.
So I'm pretty sure I'm accurate about that. So that's part of it. Why? Well, whatever the same reasons were in the past are the same reasons. I do think that some buyers are aware of this potential for a refresh in the Model Y, what that could mean. So some buyers might be waiting for that. I think some buyers may be waiting because they anticipate interest rate cuts. And so they don't want to buy a car until that happens. Some buyers are scared about the economy, scared they might get laid off. I think some buyers are, like you said, maybe they're like, well, let's just get the Cybertruck or let's get the Model 3. Look at this. But I think a lot of it really has more to do with just where we currently are in the cycle, right? Like with Europe, I think a lot of it has to do with the fact that the factory was down twice.
Yeah.
It's not like it was just down once. So it went down, had to ramp up, went down, had to ramp up again. And when you do that, the vehicles have to get to somewhere, right? And to get to somewhere that takes time. And so they could be in transit. So I think that's part of it, right? More than what would normally be there. In the States, I think a lot of it is I think people are scared in the States. I think people are scared to take on any big debt right now. So while I don't think it's necessarily the interest rates, I think a lot of it is people are a little timid about what's happening, right? I mean, it's getting almost scarier and scarier. And, I know I haven't subscribed to the whole recession idea up to this point. Though I think there are valid points about that. I do think people are starting to get a little more conservative with their money because, well, we haven't had rate cuts. The longer that happens, the kind of scarier it is. Inflation almost seems like it's still going up now. Same way we talk about the vehicle deliveries, it's not just, a up or a down, right? Things zigzag.
Yep. Yep.
So maybe that's what it is. We'll know, here shortly when we get March data. But what if the Fed raises rates again?
Right.
Possible.
We will
What if
talk about all of that, by the way.
what if we get into a deeper war? What if the wrong president is elected? What if something happens going into the I think people are just scared. And then we're seeing I know we're going to talk about this, but the employment, I don't want to say problem, but the employment picture is not as rosy
As it
as
was.
it seems. And we've talked about this. I've argued that I don't think it's been rosy, but we've been able to put, some lipstick on the pig. So I just think and I could go on. There's just so many things. I think it's death by a thousand cuts. And all this tends to happen in the Q1.
Yeah.
Yeah, we didn't even talk about Chinese New Year's. We didn't talk about the delay in Model 3 ramp. We didn't talk about any of that, right? So there's so much that could go into it.
Yeah, so that's why I kind of isolated those things though, because the Chinese New Year is going to happen. The first quarter is going to happen. All those things are going to happen. The one thing that I don't think people are paying attention to is that Model Y is an expensive sedan and it's the best-selling car in the world. That was already a crazy thing. It makes absolutely no sense. And so you've got to have that buyer that has the capability to spend that money, like you point out, that maybe they're afraid that AI is going to take their job. So the economy is great, but they're in the tech world and they're afraid AI is going to take their job or might take their job, or they're worried, they're paying attention to interest rates, and like you said, they might be waiting for the interest rates to come down. But I think the buyer who buys a $50,000 or $60,000 car pays more attention to the lifestyle aspect of it, how they're going to look when they have their car, to their friends, whether they're getting the greatest, latest tech, all those kind of things. And right now, the difference between the tech on a Cybertruck and the tech on a Model 3 refresh compared to the tech on the Model Y, it's a big difference.
So are you putting out there that you think people are waiting, or you think they're saying, no, I'm not going to buy Model Y, I'm going to buy Cybertruck today?
Yeah.
at today's
Well,
price.
they'll wait for either one. They'll wait for the Model Y. Well, they'll wait for one of the three. They'll either wait for the Juniper, they'll wait until they can get the Model 3 refresh, and probably especially the Model 3 Performance. That's going to be a bomb of a car. What do you call it? The
Ludicrous.
the ludicrous. Are they going to wait when their number comes up on the Cybertruck? And I just think that those three things are right now going to impact, in addition to interest rates, et cetera, are going to impact that Model Y buyer. And this will be an ongoing thing. Now, why do I even bring it up? Because what can we do about it? We can't do anything about it. But the wake up call for Austin would be, Elon, why are you putting off the Juniper till next year? There's got to be a way. You guys are fast. You can do these iterations like crazy. Why are you waiting until next year? At least for the creature comforts and the tech. If you want to wait for till next year to do the body change, fine. But give us the performance change now. That's my thinking. I've been saying it for 3 months.
I think they're focused on the next gen platform.
I do too.
I think there's too many, especially in Austin. I think Austin has all hands on deck for that right now, and they're not going to waste time to give somebody a extra light bar, extra screen in the car. Like it's just not worth it. Like it's short term thinking, and I think that's their mentality.
Okay, well, we'll see what happens. I'm going to continue to press my theory. I mean, not my theory. I'm going to press my point to Austin that they should really move faster on, because they're going to do the Juniper, they said, next year anyway. So what would be the diff? Let's get it done now. Anyway, let's go on to Concord. Says they're still saying that Tesla's a buy, and they've got a 235 price point. They mentioned the ramp on the Cybertruck and the M3. That would still be in the pipeline. That would be one of the reasons they think the miss happened. Kind of talked about that. Oh, no, we didn't. So they're saying, oh, and I said that this morning as well. That was one of my first points this morning is you have both of those, the Berlin ramp after the factory shut down. So that was ramping during the last part of March. You have the Model 3 ramping in the last part of March. You have the Cybertruck ramping. So all three of those were in ramps. So you would not be seeing much deliveries on any one of those three in the last couple of weeks of March. And that could have been maybe 25,000 of the 50,000 overhang. Possibly.
Yeah, possibly. I mean, I think people are just. It's good to it's delivery day. Okay, we're all gonna get into this. But I also think people are getting a little too deep into the why, what's happening, it's, what does this mean, right? And trying to find all the signs. Like, we're probably all off. It probably has nothing to do with anything we're saying. They probably decided back in early February, hey, you know what? Let's plan on shutting down Shanghai and going down to 5 days because we're going to do some repairs here and update this line. We're going to be doing some refreshes anyway. It'll be the holiday. Well, yeah, let's not do a big push. Just give people more vacation and rest because we're going to be doing the ramp and that's going to be like for all we know, that's everything that was happening. And they knew this ahead of time. And we're all opining and trying to guess and trying to figure out and read the stars and all that. I don't know. I feel like we're getting too lost into the weeds right now, and everyone's trying to understand the why behind it. We must know.
So, by the way, the 5.5 day, the cutback from 7 to 5.5 days has never been confirmed. We've never seen anybody confirm that. So, that might not even have happened. Okay, last one before we go into the general market right now is the Elon's politics. I have stated at almost the whole time I've been on this channel, almost 14 months now, I've been repeating my particular mantra on this. I'm just curious what you think. And it's pretty much what Munster said. I think that when you leave your tribe, which he did when he started becoming more interested in the things of the right, and he even made his little teeter-totter where he shows the that the fulcrum moved, not him. And so he has the same policies he always did, but that the liberal folks moved, not him. But if you leave your tribe, you are really, really out. You are is much worse than somebody who is already in one tribe and you disagree with them, and then that person makes a statement you don't like. It's somebody that leaves the tribe that you really are angry with. But on the other side of the coin, there's a lot of folks on the right who were not very excited about Elon Musk because they don't like the idea they're being forced to buy green anything, much less cars. So there's a whole bunch of folks on the right that think that way. So as Elon has moved right, he's ingratiated himself with some of those folks. So I think that's what Munster didn't put it in details like I just did, but I'm 100% sure that's exactly what he meant. So he's saying he thinks it's a slight net negative. I'm thinking he's probably right. It's a slight net negative, but maybe not. It might actually turn out to be a positive long-term, because where are the conservatives? They're in the Midwest, which hasn't ramped up, which hasn't seen the S-curve develop yet.
Yeah, the whole politics thing, Elon moved right and all this stuff. I don't think Elon moved right. I don't think Joe Rogan moved right. I don't think I moved right. I think the world and politics changed. Okay. Freedom of speech used to be one of the pillars of the Democratic Party.
Right.
Not going to wars used to be one of the pillars of the Democratic Party. And that's changed.
Yeah.
And we've seen this in history, right? You know, Abraham Lincoln and his Republican Party swapped and it switched, and the values changed to become the Democrat. We've seen this switch happen before. So I just think it's more so people aren't changing. I think the politics and the politicians and what they're pushing for is changing. And I think people are just sticking with their own values. And when you have a binary choice in politics, as we do in this country, well, one side seems more crazy than the other. That's just tends to be like, if your values haven't changed, if
Mhm.
you still believe what's right is right, well, then you're gonna align with whoever is speaking more fluidly on that side of it. I mean, you could argue that the Republican Party has become more left in many
Yeah.
ways,
Yeah. Yes.
right?
Yeah.
You can. Like, the Tea Party really disrupted a lot of things. And so the Republican Party today is not the Republican Party of George Bush.
Right.
It's not. It's not the Republican Party of Reagan,
Right.
right?
Definitely
It's
not.
much, much different. So I don't know. I think it's more of politics changing. I'm not saying, I don't think it's one person's moving a certain way. And Elon is doing what he's supposed to do as a citizen.
Hmm.
He has a voice, he has influence, he has power. And your job as a person with good morals, as a citizen of this country, is to speak truth when you see something that's not right.
Hmm.
If a woman is getting abused by a guy and you just walk by the street because you're like, well, I don't want to get involved with that, like, it's not my place. I don't know what's going on. I'm just going to keep walking. That's not right. It's harder and you might get punched in the face, but to go and defend that woman, that's the right thing to do. It may not be the popular thing to do. It may not, there may be no benefit for you to do that. Like, there's no benefit for Elon to do what he's doing. There's no benefit for Joe Rogan to do what he's doing. There's no benefit for any of that. But there's a difference between right and wrong. And what they're lucky about is that they have enough, they're financially free to the point where they can just look at right and wrong and make decisions based off that. So I know I'm getting a little like philosophical about this, but I truly think that it has nothing to do with politics. It's just calling a spade a spade. There's right and wrong, and it is wrong to let people come into our country illegally. It's called illegal for a reason. All right. We want immigrants. I'm an immigrant. My whole family are immigrants. Elon's an immigrant. We came here legally. All right. If you're an asylum, or if you're seeking asylum, there are ports of entry to seek
Right.
asylum,
Right.
not to use in a legal way. And furthermore, you're skipping the line in front of people who are seeking asylum as well. And there's no reason why you have more right than that person. So like, you can go on and on, but there's right and there's wrong.
Yeah.
At the end of the day, we don't belong in a lot of these wars. We don't belong in wars without accountability. You don't go to war without understanding what does success look like? What does success look like? And then you work backwards from there. And do we need to be there? Did the American people vote to go there? Did Congress decide to go and do that? Did we vote with our tax money to do that? Yes or no? And so, like, there's just right and wrong. And somebody who speaks voice to right and wrong should not, in my opinion, be demonized. And if that's the case, then I'd rather be on the side of that and knowing that I'm supporting someone who's speaking up for their truth and what they think is right. So I don't know. I'm passionate about this. I know you are too, but I just, I don't think it's politics. I don't think it's someone leaning right. I don't think it's that surface level. I don't think it's that binary. I think it's just what people think is the right thing to do.
So now let's turn to economics. Markets have been down big 2 days in a row after the fastest run up in history. I started saying last Thursday and Friday, have we gone too far too fast? Are we going to see a pullback? I didn't think the pullback would happen this soon, but generally a pullback is going to be 5%, 10%, or 20%. Or sometimes we just have a breather. Do you think we've just had a breather for 2 days and things will be normal the rest of the month? Do you think we're going 5 down? Do you think we're going 10 down? Do you think we're going 20 down?
I think we're gonna wait to see what happens with these jobs numbers.
Yeah.
I think right now we are still in a Fed economy, and I think once we see, hopefully, that we see that, this is gonna sound sad, but hopefully the jobs numbers aren't as rosy as they've been because they've been wrong. I think that plus showing some getting back to normal on this downward trend of inflation, if we can do that, then we can get away from this whole Fed economy we've been in, and we can start looking more about growth stories and earnings and whatnot. So I think we're just kind of in a stagnant place right now. I don't know. I think these pullbacks are good. I think they're healthy. Same with Tesla. Like, honestly, I think today was a good thing. I mean, and not to go back to Tesla, but
Yeah.
these delivery numbers, they kind of reset things,
Yeah.
right? So, like, okay, so now people are gonna be less bullish about Q2 and those delivery numbers. So it gives us a chance to outperform. And I think that's a good thing.
Well, okay. And so speaking of jobs, job openings increased 8,000. 8,000. So in other words, they didn't increase at all. That would be a rounding error to 8.756 million in February. So that means basically staying at 8.8 2 months in a row. The job openings to employment ratio, however, fell a tiny bit to 1.36 from 1.4. So in other words, 1.4 jobs open for every job seeker looking for employment was last month. That's now down to 1.36. Quit rates were unchanged at 2.2, and layoff rates rose to 1.1. 128,000 layoffs. That is the highest level in 11 months. So basically, most people would say that today was a wash with regard to those parts of the jobs picture. We get the ADP tomorrow, and of course, the full federal jobs report on Friday. I have been saying for 2 weeks that this is going to be the seminal, this will really be the pivotal day. But it could end up being like today. It could end up being kind of a nothing burger with no real directionality again, as opposed to what I'm kind of expecting, which is a big write-down on January, a big write-down on February, compared to what the numbers were originally, and then a decent or even surprising upside on March, which is what's been happening over and over again. What do you think?
So you're predicting more of the same.
More of the same, yeah.
Yeah, I predict that this time the jobs reports will not be a blowout. I predict that it will be slightly under expectations,
200,000 is expectations.
then slightly under that,
Yeah.
with revisions lower for the previous months.
Okay. All right. And people working more hours per week, what kind of an increase in pay?
I think pay's probably increased. This time of year, a lot of people get raises, um, and bonuses kick in, stuff like that. So I think there's a good chance that probably went up. Hours, yeah, no prediction on that. I I would say maybe people working less hours.
Less hours. Okay. All right, less
What,
hours.
what do you think right now?
Well, so here's what's happening. That's the two cross currents that are really a little surprising. One is oil is going up like crazy. Um, Gold is going up like crazy. Now silver is following. Um, Manufacturers are reporting slightly higher prices of raw materials. All of that is the opposite of what the problem has been on the inflation front. So gold was fine, oil was fine, gasoline was fine, in fact, low. Raw materials were at the lowest levels since 30 years ago. All of those things have been part of the reason that inflation has been down. And now all of those are showing a trend towards up. That worries me a little bit. Okay. And then at the same time, so that's on the one side. So that's, oh, I know. And on the other side is manufacturing is finally picking up. And there's a little tiny bit of evidence of services slowing down. So those two could end up, we could have services slowing down, but then manufacturing making it up. Now, all of that in a normal economy would be phenomenal.
Yeah,
You'd think, wow, this is all so good. And the oil prices, they might get back to 85 or 86, but then they'll drift down again in July or whatever. Nobody be worried about it. But we're not in a normal economy. As you said, we're in a Fed and inflation-driven economy. If oil continues up and gold continues up and silver continues up and commodities continue up, it's not going to matter what's happening in services. It's going to be more inflation, and that means no cuts. So my question is, if I'm right about all of that, does it matter if the Fed doesn't cut?
well, yes and no. Um, it depends who you are. Um, that's the truth, right? It's of course nuance. Um, I already have my real estate. I'm not trying to buy a house. So for me, no. For people who are trying to buy a house, it matters.
Yeah,
Uh, for Congress and the debts that they have to, that keep rolling over and they have to refinance. Yep, it matters. It's going to hurt them. For Tesla, for people who want to buy a car, I'm not saying it's the reason, but it is a variable in the many reasons why people aren't, trying to get new auto loans out. In fact, I think we're at a record age for vehicles out in the market right now.
yes, yes.
So yeah, so it depends for the economy as a whole, for stocks as a whole, for many companies. No, it doesn't. It really doesn't matter. I mean, it that's the fact. So it just depends. I mean, I disagree with a lot of what he says, but Ross Gerber has been saying this a lot lately, talking about if the economy's good, there's no need to cut rates. We can have growth. We can have high interest rates, high right
Yeah,
compared to
yeah, right.
what my generation's used to.
Yeah,
Um, but that doesn't mean that things have to be bad, right? I spoke about this with you, many, many months ago that it's going to happen where there's going to be a flood of people that come into the real estate market when we go back down to a 6% interest rate. Because before 6 was like, oh my God, that's
right.
crazy
Yeah,
expensive. Now it's like 7.5, that's crazy expensive. I could get a 6, so I'd kill for that,
right,
right? So now you're going to see people flooding back in, right? Because the new normal is these higher rates.
right.
So it's all relative. So yeah, I don't know. That didn't really answer your question. I'm kind of speaking out of both sides, but
But but that's kind of the point right now.
yeah,
It's like this. It's like if the job numbers come in weak on Friday, then everybody will be jubilant, like you just said. Everybody will be like, okay, now the Fed can cut in June. But if they come in like the same as they've been or a little higher, a little hotter than expected, then I think the Fed rate cuts will be off the table for the rest of the year. Not to say they won't be put back on, because of next month's, information that we get. But I mean, the jobs thing this week is going to be very impactful in terms of people's thinking. But at the current 3.9 or 4% unemployment or whatever, that's fine. 6%, 5.25% Fed rate and 4.25% treasuries on 10-year. Not that bad. 6.9% mortgages, not that bad. I mean, yeah, 9% car interest rates, that's pretty bad. Although, car companies can buy those down, and try to normalize those. Anyway, but overall, economy moving along okay. And all those things are not gonna, I don't think any of those things are going to make the difference. Now, if the Fed raises rates, yeah, that could make a big difference.
Yeah, I mean, it's going to be very interesting because it seems like China's starting to get a little stronger. Um, Listen, this last week, just look at Tesla. Tesla had great China numbers this
Yeah,
last week.
yeah,
Um, Eventually, Germany, if they're not already, will come out of their recession, right? And then we'll be the laggards. And so, as that happens, and these economies start to come back, well, what's going to happen? Well, they're going to be consuming, and that's going to, drive up costs. And so, it we as a country haven't taken our medicine. Many people haven't taken their medicine yet.
yeah,
So I don't know. It'll be interesting. I do think that this will be the month where we know. I would say this will be the month where we'll know if at least one of the rate cuts are definitely off the table.
right.
If we don't see things moderate with inflation and actually start to show, like, okay, yeah, we went up and now we're going to start coming back down a little bit. If we don't see that this month, then you can definitely guarantee there's not going to be three, is what I would say. Um, and especially the closer and closer we get towards, you know, call it the 3 months leading up to the election,
Yeah,
I say nothing's going to happen then.
yeah,
I think
no,
there will be
no, no, no.
nothing.
Right, exactly. Yeah.
So,
Right. So we have in the markets right now, we've got Tesla down 45 cents in the aftermarket. Again, that would be, I think everybody would be perfectly happy with that result. So a total then roughly $9. And as you pointed out, sitting at $166.18. And if we go in now and take a look at the rest of the stuff that's going on, we have got the bonds. Well, that was nice. My app is completely going nuts here. So the bonds have come down a little bit. The 10 years come down a little bit in the pre-market, down 0.8 basis point, but still sitting at 4.357. So that's pretty high up there. The 2-year is down exactly the same amount, but the 2-month is up again. So now we're looking at even more, so it was really had started to collapse. We were beginning to really see the 2-month and the 10-year and the 2-year and the 10-year getting closer together again, but now it's widening out. Let's see. Well, you've got, about 35 basis points for the 2-year to the 10-year. So that's still pretty tight compared to where it's been. It's been more like 40, 45, 50 basis point difference. So that has shrunk somewhat. Don't know if you heard this morning show. Somebody has said that it won't be a case of the 2-year coming to meet the 10-year. It won't be the 2-year getting lower interest rates. It'll be the 10-year getting higher interest rates coming up to meet the 2-year. So that's, and I don't know if this person's right or not, but that is an interesting thing to contemplate and to watch for.
buy your homes now, guys. You think rates are high now.
So oil is up another 34 cents in the pre-market, now sitting at 85.48, and Brent is at 88.92. So we are getting really, really close to seeing Brent in the 90s. Natural gas down another 0.43. So natural gas has been falling. Well, it's still at $1.85 though. So it's still, even though it's under 2, it's still, fairly low. And you got the dollar. The dollar is flat right now, and gold is up 20 at over 2,300.
Wow.
Another all-time high, 23.01 and 10 cents. How about them apples?
Yeah, how about them apples?
So it turns out that the central banks around the world have a very, very low stock of gold, on the order of 20% of their holdings in gold. Normally, it's been way higher than that, sometimes as high as 70%, and generally around 40%. So sitting on only 20% gold, that's what some pundits are saying, is that these central banks are starting to buy gold again in order to get their reserves of gold up in the central banks. Don't know if that's true, but that's what some are saying. Copper up 0.21%, still moving up almost every day, 4.08 now. And then the Bitcoin, the place where you go to,
Bitcoin.
down 3,900 today to 65.5. So if you want to make sure that you have a place to go where you can definitely play the ups and the downs, if you like that kind of stuff, the Bitcoin has been that and continues to show really big moves.
Yeah, I mean, Bitcoin's like a perfect example though of this whole, ebb and flow, and things don't just go straight up,
Yeah, yeah.
It's a perfect example, this is why time is the most valuable asset, because in a good asset class, I'm not saying Bitcoin is or isn't, but or in a good investment, over the long term, things do tend to pan out.
If the underlying value is there, if the
Yeah.
fundamentals are there, it'll pan out. Yeah. Equities, we've got the Dow down another 15 at 0.04%, S&P down 1.25 at 0.02%, and the NASDAQ, you could just call it flat entirely. So interesting, after the big move today, all three are flat in the pre-market. And then as always, we go back and take one last look at Tesla's, about the same, down 48 cents. All right. Well, any last thoughts about today's action, about today's the entire amusement park that we live in when it comes to the markets?
Yeah, I would just say take it in stride. All right. In reality, Tesla did phenomenal today. It was a down day. We had horrible numbers, and it barely did anything.
Yeah.
I mean, we had bigger swings in 2022.
Oh, yeah.
2022, this would have been down 20-30%.
I
Easy,
agree.
easy.
Yeah. Yeah.
So I don't know. I just understand why you're invested in whatever company you're invested in. And if nothing has changed with the company, if the thesis is still there, if the vision is still there, and it's still something you believe in, life's good. You got air in your lungs, you got a roof over your head, you got food on the table, you got loved ones. Don't stress.
Okay. All right. Well, I think we brought the good news, as we should, because that is the name of the show. So as always, Nicholas from New York City, from the Big Apple, thank you for helping us to celebrate the good news on Tuesday. And until next Tuesday, thank you all out there for listening. Hit the like button. It'd be a great idea. And there's a couple of shows earlier today you might want to take a look at. I did one in the morning, which kind of we covered in this show as well. But if you want to see the details, that was a pretty good show. Got a lot of people watching it. I'll put a card up for that one. Nicholas, thank you so much. And
Cheers.
to everybody out there, it's been great talking to you.